Now, you've probably seen this story of GameStop, right? Yeah, so the last couple of weeks have not been the best for GameStop. I know we've spoken about it a lot, but last couple of weeks have been the longest losing streak for the stock in over a year. In the last year, since the start of the pandemic, it was at about $3 a share at one point, slowly crept its way up to about 8 or 9, and then it exploded to over $400 a share in January. But now, since about the end of February, February 27th, around there, GameStop, stock ticker symbol GME, has had its longest losing streak in the last year. Currently, it's bounced back a little bit the last couple of days. It was up over, I believe, 20% in a single day this past week. But still, a lot of people are getting concerned because a couple of different reasons. So first of all, GameStop is making main reason is this stock skyrocketed with the massive short squeeze, everything going on with Wall Street bets. That's the first reason. So a lot of people think, it's going to come crashing down at some point. The second reason, so that's like the most obvious one. The second reason is that GameStop has been making a lot of changes to the C-level executives, to the company in general, and they're in a very, very large transitioning period right now. So recently, they've come out and spoken about hiring a new chief growth officer, a new chief technology officer, a new chief operating officer. All these people were from Amazon. They also hired major new positions to help transition the business from a retail, like a brick and mortar business, into a technology e-commerce business by hiring people from Walmart, people who built the app at Walmart, and other major technology companies they brought people on from. So that's one thing. Another thing is that this recently, a lot of people in Wall Street bets have been starting to turn away from GameStop, looking more at AMC, some smaller stocks, and things like that. Because while GameStop was the main driver of this entire short squeeze, now it's priced, pretty high per share, over $160 per share. And some people can't afford that. They want to look for smaller, like lower price stocks, maybe stocks that are around $3 a share or $10 a share, something around there. And so right now, a lot of people are getting a little bit concerned about GameStop. Where's it going to go? My opinion, long term, I think they're at a very key inflection point right now. Not in terms of stock price, but just in terms of the business in general. They've made a lot of new hires, made a lot of changes to the structure of the business, and this is something they have to do in order to succeed. They have to transfer from a brick and mortar to an e-commerce, solely digital business. And the only way they're going to do that is making those big changes. But we're still at a very key moment in time because we don't know if all these changes are going to pay off or if it's going to end up failing. So either way, right now, no analyst has a buy rating on the stock. The stock has 5 sell ratings and 2 hold ratings, but 0 buy ratings. So right now, the average analyst price is $46 a share. Really, I don't know where it's impossible to tell where the stock price is going to go. There could be a large influx of people from Wall Street bets coming in again. But either way, if you're looking at this long term, like what I would do is right now they're at a very key moment. They can transform their business and be a massive, massive company in the future if they're able to transition and be the Amazon of gaming, similar to what Chewy has done, where Chewy is the Amazon of pet products. So if they're able to do this successfully, I think then that is when you can start looking at the stock being like, okay, this has a long-term potential. Right now, it's just too up in the air to really know.